Hi everyone, Phil Graham. Welcome to the Water Market Report for the 18th of Feb. Fairly dry week over the last week. Temperatures cooled down a little bit though. The dams across the MDBA are currently 62%. This time last year they were 86%. Hume in particular is down quite a bit, currently 37%, whereas this time last year it was at 79%. Yesterday we had some allocation announcements, and some of them were a little bit unexpected, particularly in New South Wales in the Murray, where General Security went to 110%, and accordingly High went up an extra 3% to 100% allocation. So somewhat unexpected. It did have an impact in the market. We saw sellers in New South Wales Zone 11 come out at 160 and high 150s, which is a little bit lower than what it previously was trading for, which had a flow-on impact into Victoria, which is currently around about 170 a meg. Above choke in the Murray, MIL gave out a 3% distribution as well, which increased supply, so it sort of went from 120, 130 down to sort of 112, 115 currently at the moment. Over in the Bidgee, there was a 2% increase, which brought it up to 37% on General Security, which once again had a bit of an impact, combined with irrigators getting towards the end of their watering program for the year. Buyers are thinned out a bit, so we saw prices sort of reduce, and we're currently around about the 200, sort of 210 over in the Bidgee, down from about 220, 230, which was previously was trading for. So yeah, following the allocation announcements, we'll see where it all sort of settles down over the next few days, but certainly has been a softening across the board. Carryover prices, it's a year where irrigators are starting to turn their mind to carryover. We're seeing quite a bit of demand for carryover and high reliability in Victoria Zone 7 and in the Goulburn. The risk of spill came out yesterday, and they're currently saying the risk of spill in the Goulburn is only at 30%, whilst in the Murray on the Hume is at 50%, which seems sort of relatively attractive, where carryover prices are sort of at $10 and $12 in the Murray and $10 over in the Goulburn, compared to carryover against low reliability entitlements, which are sort of $60 over in the Goulburn and $70 and $80 in Zone 7 against low. So we're seeing a bit of demand for carryover against high reliability at the moment. In respect of forwards, we did have a bit of activity over in the Bidgee, where there were sort of buyers and sellers looking to sort of start doing some forwards at around about the 270 a meg mark for next year, but following the allocation increase yesterday and the softening in the spot price, that demand might taper off a bit, and we might see prices sort of come down a little bit there. In the Murray for forwards, the last sort of transactions have been at sort of 260, and once again we'll start to see a bit of activity in that market as some of the big almond growers get to sort of turn their mind to next year now and locking away a percentage of what they need there. So once again, it looks as though the market's going to form around that 250 to 260 sort of mark. In terms of permanent entitlement markets, we're seeing the acceptances come through from the first 70 gig tender from the Commonwealth. As expected, the prices are sort of higher than what the current market is trading for, and 20, roughly about 20% higher. The normal market at the moment with buyers and sellers is sort of transacting in balance, and prices are sort of relatively stable. We've seen SA Zone 3 creep up a little bit around that 7.3 mark, and Zone 7 has crept up a little bit as well. There's a little bit of softening over in the Goulburn at the moment, where because it wasn't eligible for that first tender, there's sort of a bit of a built-up supply over there, and we're sort of seeing prices around that 3.6 mark over there at the moment. Anyway, thanks for listening, and we'll see you next week. Cheers.